you know that the financial system meant to protect your money might actually be designed to keep you poor? Well, in today's video, we'll explore how traditional finance can hold you back and why Bitcoin offers a path to financial freedom. The traditional financial system promotes debt dependency both at the individual and national levels. Policies like quantitative easing and low interest rates primarily benefit the wealthy who own the majority of financial assets. For instance, the Federal Reserve's actions during the 2008 financial crisis and the COVID-19 pandemic led to significant stock market gains, benefiting the top 10% of Americans who own 84% of the stock market. This has been well documented in Thomas Piketty's book, Capital in the 21st Century, which highlights how wealth concentration is driven by returns on capital outpacing economic growth. Inflation, driven by the Fed's monetary policies, erodes the purchasing power of your savings. During COVID, the Fed printed trillions of dollars, leading to higher inflation rates. This decrease in the dollar's value means that everyday goods and services become more expensive, reducing your real income and savings over time. The book When Money Dies by Fergusson illustrates the impact of hyperinflation in Weimar Germany, drawing parallels to the risks of unchecked money printing today. High levels of personal debt, including student loans, credit cards, and mortgages, limit financial mobility and trap individuals in a cycle of repayment and interest. Nationally, the U.S. government's debt has surpassed $30 trillion, raising concerns about fiscal sustainability and future economic stability. Books like Debt: The First 5,000 Years by David Graeber explore the historical consequences of debt-fueled economies and the social implications of financial indebtedness. Just recently, Congressman Thomas Massie introduced a bill to abolish the Federal Reserve, following an poll where 86% of 115,000 voters supported ending the Fed. Massie proposed H.R. 8421 to dismantle the central banking system. He cited the Fed's role in creating inflation by printing trillions of dollars during COVID, which devalued the dollar and led to unprecedented deficit spending. This move is significant because it challenges the status quo and pushes for a fundamental shift in how our financial system operates. H.R. 8421 is especially important considering the overwhelming public support and its potential impact on blockchain finance. If successful, it could pave the way for greater acceptance and integration of cryptocurrencies into the mainstream financial system. Now, criticism of the Federal Reserve is not new. Wright Patman in the mid-20th century and Ron Paul in 2009 have attempted to audit or limit the Fed's power. Massie's proposal is just the latest pursuit to challenge the central bank's control over monetary policy. For those of you who have not yet read the book The Creature from Jekyll Island, Edward Griffin details how the Federal Reserve was created in secrecy by powerful bankers. This book does an excellent job highlighting the central bank's fundamental flaws and its impact on economic stability. Griffin's arguments reinforce the need for transparency and decentralized control, values that resonate strongly within our crypto community. A pretty revealing quote from Griffin's book states, "The Federal Reserve System is a banking cartel that was created by a small group of the world's most powerful bankers to protect their own interests." This quote underscores the secretive and self-serving nature of the Fed's establishment. Now, we in the crypto community have been vocal about the flaws of traditional finance for a while. The Fed's control over the money supply and inflation is a key reason why cryptocurrencies like Bitcoin are essential. Bitcoin offers a decentralized, transparent alternative that resists inflation and central control, providing a hedge against the pitfalls of fiat currencies. The Creature from Jekyll Island emphasizes how central banks, through inflation and monetary manipulation, erode the purchasing power of money, making Bitcoin a sound alternative. We also can't forget that the Federal Reserve's exploration of CBDCs has raised concerns about increased surveillance and loss of privacy in digital transactions. This contradicts the decentralized and transparent ethos of cryptocurrencies, making Bitcoin an appealing option for those cautious of central bank overreach. Traditional finance is also prone to crisis and failures, often resulting in taxpayer-funded bailouts. The 2008 financial crisis is a prime example where the collapse of major financial institutions led to global economic downturn. The U.S. government's response involved massive bailouts for banks deemed too big to fail, burdening taxpayers and reinforcing a system where financial risks are socialized, but profits remain privatized. By making Bitcoin tax-free and allowing private sectors to issue stablecoins, Bitcoin could fairly compete against the dollar, potentially leading to a gradual phase-out of the Federal Reserve. The creation of the Federal Reserve was aimed to consolidate financial power, making it crucial to seek alternatives like Bitcoin that promote financial independence. Bitcoin stands out as a beacon of financial freedom and stability, offering an escape from the inflationary practices and central control that define our current financial system. The push to end the Fed highlights a growing disillusionment with traditional financial systems that seem to perpetuate economic hardship. Embracing Bitcoin could be your first step towards financial independence and empowerment. So, if you're tired of being at the mercy of traditional finance and want to explore the freedom that potential offers, subscribe and hit that bell notification to stay up to date on how you can take control of your financial future. And as always, stay curious, stay informed, and stay tuned for more crypto news and education.